So good morning, everyone. Good morning to the Wealth Management and Access to the European Market webinar, Changes and Challenge. It's a huge pleasure to do this webinar together with the Luso-Chinese Chamber of Commerce. My special thanks to the Chamber of Commerce and to Mr. João Marcos da Cruz and Vitor Costa. It's my function here to be a host and also present Bison Bank in terms of its activities, which is one of the sponsors of this webinar. My first action will be to present the panelists that we have here today. So we have here today the board member of CCILC, which is Mr. João Marcos da Cruz. We have also Rui Mota Guedes, which is the head of equities and asset allocation at AFI Research in Madrid. We have Mrs. Lidan Chan as the senior client manager at Bison Bank and responsible for international clients. And we have Mr. Pedro Rodrigues as the head of wealth management at Bison Bank. Kicking off this webinar, and then before I pass the word to my colleagues in the panel, I just want to make you a brief presentation of Bison Bank. I'm going to share with you just a moment. I'm going to share with you the institutional presentation that we have here today. Okay, well, it's not working properly. Okay, I'll pass it afterwards to my colleagues. But regarding the presentation of Bison Bank, it's very important for me to be here today, mainly because Bison Bank, it's a financial institution based here in Portugal, mainly focused on doing the bridge between Asia and Portugal. It's a completely independent institution ruled by the Portuguese regulator, by Bank of Portugal. And the most important thing here to mention is that we are one of the institutions that we are capable to manage international clients and overseas clients in order to develop business here in Portugal, Europe, and Portuguese-speaking countries, and also Asian markets. This bank is totally owned by a private Chinese family, and its shareholder is based in Hong Kong. 100% owned by the structure based in Hong Kong, and our main activities in terms of business are depository and custody services, wealth management, and investment banking. So on the wealth management side, we have here today the team here represented by Pedro Rodrigues, and also a very important part on the bank of the bank, which is the client management department. So with no further notice, I'll pass the word to Mr. João Marcos da Cruz, which will give us an overview of the Chinese investments and also its behavior here in Portugal, because as we know, here in Portugal, we have a lot of foreign investors and participations in having equity stakes in Portuguese companies. So Mr. João Marcos da Cruz, the floor is yours.
Thank you. It's a pleasure to be with all of you. And my first words, I want to thank Bison Bank for this initiative. I know nothing about wealth management, so this is a good introduction when I'm a speaker in a wealth management webinar, and I need to say I know nothing, and definitely I'm not going to comment things that I don't know. Saying that, what I believe I know, I'm an executive board member of EDP. EDP has the chairmanship of the Portugal-China Chamber of Commerce. And what I know, it's about the social and economical consequences of these pandemic situations that we are all living. And the objective of my words is to elaborate a little bit about the consequence of this social factor. Obviously, it's not the first time that the world is facing a pandemic situation. 100 years ago, as everybody knows, the Spanish flu, gripe espanhola in Portuguese, it had a dramatic cost of at least 50 million deaths. In this case, obviously, the number, it will be much minor. So until now, we have around 1.5 million people that died. At the end of all this, I don't know if it's 2 million or 3 million, but definitely not 50 million. But the economic and social impact is much bigger than it was 100 years ago. Why? Because 100 years ago, there was no globalization. By the way, how the Spanish flu spread, it was the army. It was the army after the First World War, the soldiers that returned to places like US and Canada or India or Africa, and they spread the virus. And obviously the medicines were, I would say the medicine was in a very early stage of development. But coming to the current moment, the social impact of this situation is huge. The world is going to have the biggest decrease in GDP since the beginning of the statistics. So maybe a lot of centuries ago, other events like this happened, no doubt. But in the modern years, this is the worst economical contraction of the world. And obviously Portugal will have even, Portugal will be in a worse situation than the average of the world. Why? And the reason is very simple. The Portuguese economy, it's a very open economy, and the services dash tourism is obviously very, very important. So the countries that are exposed to tourism are the countries that will suffer more. So Portugal, Spain, Italy, Greece, south of Europe, speaking only about Europe, will have this year a decrease of GDP near 10%. I don't discuss if it's 9, 8.9, 9.4, near 10%. And next year, the recovery, it will be maximum half of this, half. So if everything goes well, we are speaking about achieving in 22 the same level that we had in 2019. If everything goes well, this is the best scenario for the economy. So huge economical problem, huge social problem, huge social problem. For the ones that like history, and I'm one of them, it's very interesting to see the political consequences of the pandemic situation 100 years ago, and the extremism in a social and political way that started for a lot of reasons, but this was also part of the reasons, with a lot of mistakes that I'm not going to elaborate because this would take a lot of time. But yes, it's a social thing, it's an economical thing, it's a geopolitical thing. And Chamber of Commerce is Portugal, China. Bison Bank is a bank ruled, as Francisco said, by Portuguese authorities, but the shareholder is through a Hong Kong-based company, Hong Kong is part of China. By the way, I'm permanent citizen of Macau. I have a nice card with the 4 Chinese stars and my name. So obviously, this affects the economical relation between China and Europe. Yes, affects. How this affects, how it will be after the pandemic situation, I don't know. But it will be something different from today. And it's important to have openness from Europe and China to navigate in this new world. China, and I'm one of the Portuguese that are in favor of a relation, an economic and political relation between China and Europe, being Portugal an European country. But we need to build a relation. And all this affects the Chinese investment in Europe, as well as the European investment in China. And we need to address this openly. Portugal, especially in Europe, and I'm not going to spend more time, sorry. I have a 10-minute slot and I promise to not to waste 10 minutes. I'm sorry for that. Portugal needs investment. China is #1 country in FDI, in foreign direct investment. Number one. It was US a lot of years ago. US lose this position to Germany, by the way. Now it's China. So it's important, an investment agreement between Europe and China. It's important that Chinese companies understand that the need of European countries, especially Portugal, I'm speaking as Portuguese, for Chinese investment today is different from 10 years ago. 10 years ago, Portugal needed companies to buy shares in Portuguese companies. Not anymore, not anymore. Now what Portugal needs is Chinese companies to have greenfield projects in Portugal. And I know, because I lived a lot of years in China, in Beijing, in Macau, in Hong Kong, I know that Chinese companies don't prefer greenfield projects. Normally, they prefer to enter in a later stage. But it's important for Chinese companies to understand that now Europe and Portugal need specially greenfield projects to boost something that we can say the reindustrialization of Portugal. So that's it. I think I have no more time to share with you. Thank you, and I'm available to answer your calls. Thanks.
Very important words, Mr. João Marcos da Cruz, because your appointment regarding the greenfield and the existing deals and mentioning that greenfield, the opportunities are important for Portugal. This is very, very important, I believe, for all the attendees and also for the Portuguese economy. Thank you very much. Now we'll also pass the word to the other panelist, which is Lidan Chan from the Client Management Department. So Lidan Chan, the floor is yours. Thank you.
Hello, everyone. Thank you for this wonderful opportunity to be here with you and with all these panelists. Today, I'm speaking about Portuguese foreign investment, and I will specify in one type of golden visa program that came up in 2018. I will share you some my presentation with you. Just give me 1 second. Okay, is everyone can see the presentation?
Yes.
Yes, great. So Starting, I will pick up Mrs. Vitor Jean-Marc the Cruz words. So he's totally right. For the direct investment since 2012, the biggest investors were Chinese people. It corresponds to 51% in terms of total investment in Portugal, which grants us a very huge number that Portugal received. It's around 5 billion. In Portuguese, it's 5 mil milhões of direct investment, which granted a golden visa residency permit. Okay, in the next in line, it's the Brazilian, which we have a very tight relationship with them in terms of history or in terms of language. And only in November of this year, the CEF approved 86 direct investments in Portugal, which also the top nationality is China with 22 approvals in this kind of program. This is a general picture that you may see that Portugal, it's a very kind country to receive foreign investments, and we will dissect this investment just for you to see which are the most of them. So, of course, most of us already know the real estate purchase is the biggest and the most hot topics in Portugal for the direct investment. Nevertheless, we will see within these most recent years, the capital transfer, it's also a huge topic. I will explain why a little bit later, but just for comparison, of course, the real estate, it's on the high track, but the capital transfer already had 541 approvals for direct investments, so golden visa, and this will include two types of categories. One is 1 million transfer via deposits in the banks, and another is through venture or private equity funds, and the ticket is 350,000 euros, which is a smallest ticket in the most of the categories for golden visa. And it already generated more than we expected in terms of direct investment. Right. Inside of these capital transfers, we'll see that, of course, the oldest program, which is the category 1, the subparagraph 1, it's 1 million transfer. Okay, it's around 484 people that already had approval, and of course, the most of the approvals generates most of income. But nevertheless, since 2018, the immigration office approved for the private equity funds investment, and until now, until November 2020, we already have 54 approvals granted by the immigration office, but we have around more than 100 applications submitted just in these 2 last years. Okay. Today, I will talk a little bit about the private equity funds, so it's 350, as I told you, and you will see that this is a huge advantage for the direct investment we receive, and this is basically to invest also in greenfield projects through the funds, but also to renovate most of the projects here in Portugal that is lacking of investment. Entering of the type of golden visa, there's in total 8 of type of golden visa. This is pure direct investment in Portugal, okay? 2 of them is the capital transfer, which I already mentioned, 1,350,000. Another is the real estate property purchase that I think most of people are known for. And the other ones that is less known because due to the bureaucracy and the value, which is our corporate investment directly in a company, research activities in the scientific fields, artistic projects, and creation of job positions. So what what Bison can provide you in terms of this kind of investment. So Bison Bank, as Francisco said, it's a Euro-Asian partner serving the customers here. So we structure a service that can provide the investor, the foreign investors to Portugal to be liaised with the investment process. So they will not have to fear any of the pandemic situation because we promote a remote account opening through through online process. Okay, and also you will have the dedicated client manager through a private banking service, and you also can reach the multi-currency account for the best usage of the currency on your own. Besides that, usually a foreign investor likes to have the general information and the general service provided by a bank. So what we structure is our service for foreign investor is to have access to brokerage, discretionary portfolio management, investment advisory, retirement saving plans. So they can, after their investment, can think about their retirement in Portugal, which is a very good way to enjoy the life. Access to Asian market. Of course, most of foreign investors, besides investing in Portugal, they have interest to keep their worldwide investment, and also they have a sneak peek on the Asian market. Okay, third-party funds and venture capital funds eligible for Golden Visa, which the bank can provide a portfolio for that. Okay, so why Golden Visa through 350,000 euros in a private equity fund? This is a program, a very recent program that came up with very reinforced activities through the market, because the real estate market was reaching at its peak, and the asset manager saw the way that they can fund Portuguese companies and Portuguese greenfields in terms of project, and this type of Golden Visa came up with the Immigration Office approval in the latest 2018. Okay. This type of Golden Visa also allows to reunite the direct family of the main applicant. So with only 350,000 euros, the main applicant can have reach for all the entire family to come to Portugal, while benefiting the risk, a low risk investment profile, because in the fund you will diversify your money into a lot of projects, not just one. Instead of like real estate purchase, you'll only purchase one house. In the funds, you'll purchase a lot of them or invest a lot of in greenfield projects, or even a project that is already developed, and will focus on the yield you will receive during the 5 years of investment. Okay, all the funds are regulated by our CMVM authorities and Bank of Portugal. Okay, and one good advantage is for non-residents, the tax is exempt in terms of capital gains, which is 0% for the foreign investor. This is a huge advantage that we have in terms of investing in 350,000 euros in private equity funds. Okay. Usually the average of the yield in this kind of fund, it's 5 to 6%. It's not guaranteed, but it's expected. So comparing to other investments, it's a very good option for you to think about it. Okay, what is required in terms of this type of Golden Visa, which is a direct investment? The fund must be registered under the Portuguese legislation, of course. 60% of investment must be realized in commercial companies located in Portugal. Okay, so that's why we wish to renovate and capitalize Portuguese companies through this way. Okay. investment maturity needs to be at least 5 years, the same as the other categories. Okay, the minimum capital transfer is lower than the other categories, the most common category, which is 350,000 euros. And you have to spend minimum 1 week per annum in Portugal, just like the other categories in the golden visa. Okay. What in terms of the fees for this golden visa process? This is a very simple and very less bureaucratic program. So you can do everything remote until the application. Okay, that's one advantage for you. So in this case, I think the market already heard that the US clients are going for this kind of investment because it's cheaper and it's more simpler in terms of process. Okay, you just need to put here the 350. The bank will subscribe the fund and issue the declaration, and that's it. You have the application completed. Instead of for example, the real estate purchase, you have to go to see the house, to measure the options, to pay the taxes, which is a very high tax. Okay, and you have to continue to sustain your real estate during the 5 years. In this case, you don't have to. Okay, you just need to keep the 350,000 inside our fund, and every year you will still get an expected yield, which is without a minimum effort or a work basis. Okay, the fees are also lower, much lower. You don't have to pay taxes in these cases. Okay, just some basic commission fees that bank charges, or any other fund that will give you, and that's it. This is the first and the simpler solution for the direct investment through Portugal. Okay, based on this, I give you a very simple explanation. If you have any questions, just let us know in the Q&A session. And I think I am also at my time, so I leave the word to the rest of panelists. Thank you.
Thank you very much, Lidan-chan. Let me just update on the following before I pass the word to Mr. Rui Mota Guedes. We are receiving already some questions. We will have a Q&A period at the end of the webinar. We'll have 10 to 15 minutes for the Q&A, but we are already receiving some questions. I'm taking note of them. And this is a very good example, joining the two speeches of Mr. João Marcos da Cruz and Lidan-chan. This is a very good example of funds that can have greenfield investments for Portugal, and also a very good opportunity for allow the clients to acquire golden visa vehicles for Portugal. Now I'll pass the word to Mr. Rui Mota Guedes, that will speak about the macroeconomics before and after the COVID. I think it's a very important item on this webinar, and everybody's waiting for your words. Please.
Yeah, thank you very much, Francisco. I have a small presentation to share with you. First of all, let me thank Bison Bank and also the Portuguese Chinese Chamber of Commerce for the invitation to speak here at this webinar. As Francisco just said, I'm going to give you a very quick overview of what happened and what we can expect for the economy of the coming year, this year, and of course the coming year, and also the implications that this may have for the major world economies, in particular the European Union, of course, the United States, and also China. The presentation is going to be fairly small, but please, if you have any questions or you want any more details, please, as Francisco said, just ask, and we can get into any details that you'd like. I would say that first of all, this is a very brief overview of everything that is in this presentation, and the presentation will also be available for you afterwards. But I would say that here we have, let's call them, in terms of economic terms, of course, not in pandemic terms, but in economic terms, we have basically 3 countries that have done fairly better than others, and those are China, for one, where most other countries will see strong fall in GDP this year. China will continue to grow. We expect around 2%. While, for example, in Portugal, GDP will fall about 8 to 9%, Spain about 11%, in the United States will fall about 4%. So, but in the entire world, we have, aside from China, the US and Germany, or also the countries that have fared fairly well through the pandemic, and where the economic impact will be lower compared to other countries. And this is because these were the countries that have taken the biggest steps to prevent that economic fall down, in particular in the United States, with the fiscal packages that it approved, and also the help of the Federal Reserve, and in Germany also the massive fiscal packages that were approved early on, and also, of course, for other European countries in the Euro area, the help of the European Central Bank. But here Germany is clearly set apart in terms of the amount of fiscal spending that it will do compared to other European countries. In China, we saw also the same thing, a very rapid response on the pandemic front, of course, where the Chinese authorities were able to control the pandemic much faster than in other places, but also on the economic front, with not only strong fiscal spending, but also help from the central bank with lowered interest rates, etc., as we have seen also here in Europe, right? As Mr. Marcos da Cruz already said, the economic cost of the pandemic is very similar to what we saw in 1918, although, thank God, not the human cost, where there is not, well, in 1918 there were more than 50 million deaths, while now we are, as Mr. Marcos da Cruz said, above 1 million. And the problem is that in some countries, and specifically in some emerging economies, the damage could be more permanent because of this strong impact to the economic activity, right? In Europe, I think that the responses were fairly adequate, especially when we compare it to the financial crisis that we saw in 2009, 2012 here in Europe, where the response there was very slow at the beginning and was not coordinated at all. Now we had a very, very fast and strong response, not only from the European Central Bank with increased quantitative easing measures, etc., but also from on the fiscal side with the approval of European funds to help the countries in most need, right? That is clearly much better than we saw in the past, and that bodes well for European countries and also for European integration, while some may see, for example, Brexit, or now even the issues that we're having with Poland and Hungary that don't want to sign the new budget because of the rule of law clause that means that other European countries could interfere in their domestic affairs. But in general, what we saw is that the response from Europe was fairly coordinated, very well coordinated, and very fast compared to what we had seen in the past. The recovery has clearly slowed down in this last quarter of the year with this second wave of infections that we are having in Europe and in other places. For example, the United States today, new record number of deaths, with more than 3,000 people have died in the United States over the last 24 hours. And also, we also see in other countries, especially in Latin America, but in Europe and in the United States in general, the second wave is causing more damage, and so this has slowed down somewhat the economic recovery that we were having. But we think that in 2021, the economic recovery will begin and will resume at a fairly decent pace. Regarding what we saw in terms of impacts and pandemics, here, for example, here you have there is this correlation between the number of deaths and, in some cases, and the number of GDP loss, right? In some places where you had more people dying is where then you had the biggest restrictions, and this has led to a bigger fall in terms of GDP. And you can see, for example, here the case of Spain, where clearly had a very, very strong restrictions in the period between March and June, and the fall in GDP is the highest amongst the biggest countries, right? For example, on the other hand, China, because the restrictions were very, very strict, but were done in a much smaller period of time, the loss in GDP for the year was much less, right? That's why China, although was growing at about 6%, this year will still grow 2%, while Spain, which was growing about 1.5%, this year is going to fall. We'll see a big fall in GDP, right? But again, we don't, although there is this relationship between, you know, bigger constrainment of movements, and this means less economic activity, there is still, we still are not quite sure that constraining movements actually helps that much in terms of preventing more deaths, right? For example, in the case of Sweden, they haven't constrained as much as other countries, and that's not why they've had more people dying there, right? So again, as I said, in Europe, this second wave, you can see it here on the chart on your left, this second wave is already slowing down once again, which is good. While in the United States, for example, it's still going up very fast. In Asia, things are looking much better. For example, China, you don't even barely see any new cases at all. And the only country where things are not going particularly well is in Japan. India also, we saw this big second wave coming in through in September, but things again are improving. So it is possible, especially here in Europe, that we get a third wave after Christmas and after the New Year, because now we are once again going to allow more people, more movements of people, etc., and that it's possible that we get a third wave. But again, we already know, and we seem to be able to adapt to these new waves as they come much better in economic terms than we did before. As I said, in terms of GDP, the world is going to see a fall of about 4% this year in 2020. Again, the biggest fall for more than a century, and very similar to what we saw in 1918 with the Spanish flu. And as you can see here, the developed world is much more affected than emerging markets. And in particular, when you compare the big economies like the United States, Euro area, and China, of course. The United States about 4% this year, Euro area 7.5%, the fall in GDP, while China is still going to grow. Not as much as we saw last year, of course, but it is still going to grow. And then we should see this pickup in growth in 2021 for every region in the world. But again, China here is again leading this pickup in growth, even for example, compared to India, where the fall in GDP is much stronger. And so we should see a much stronger pickup. That is not the case. The Chinese authorities here have with all the stimulus that they have implemented, have at least have sowed the seeds for a much stronger rebound in GDP next year. In general, for Europe, we do see also a rebound in growth, not that strong. We would like to see more. We still need to see how the new funds are going to be implemented and how they're going to be spent. But definitely, growth will resume next year, and then in 2022 also we'll continue to see growth at a more normal pace. Okay, by areas, the Euro area was by far the most affected. As you can see here, GDP is not expected to reach pre-pandemic levels before the second quarter of 2022. So we're talking about 2.5 years, more or less, to get back to where we were in 2019 in the Euro area. Again, here, all of the big economies, Spain was the most affected. As with Portugal, Spain is very dependent on tourism, and of course, this has had the pandemic has had a very negative effect on tourism, as you very well know, and this has had a much bigger impact in Spain and also France and Italy than, for example, Germany, which is a much more industrial economy and is not dependent on so much on services, right? In the United States, the impact is also very strong, but here the US is going to recover faster, and we should get to pre-pandemic levels in terms of GDP by the end of next year, September. Sorry, September 2021. The comparison of the two areas, the US and the Euro area, as you can see, to get back to where we were in 2019. So this is 2.5 years lost. I don't put China here because, of course, China has not lost any GDP. China is going to grow. It's going to grow less than it did before, but it's going to keep growing. In terms of inflation, as you might have seen, I don't have any inflation projections because inflation at this point is not an issue anywhere in the world. In the Euro area, in the United States, in emerging economies in general, there isn't any inflation problems, and we don't see any problems from inflation coming over the next few years. This is because output gaps, meaning the capacity to produce, is still very large compared to what we can consume given the shock that we just had. So we will continue to see this very low inflation for at least the next couple of years. And then after 2023, we will see if all these measures that have been taken by governments and also by the central banks can actually help us recover any of this lost inflation or not. My view is that given all the challenges that we have, the amount of debt, and also the slowdown in population growth, is that inflation will continue to be very low for the medium to long term, right? In terms of spending, in terms of I'm not going to go through everything, but to give you an idea, sorry, in terms of emerging economies and advanced economies, we saw there is some differences. Of course, advanced economies, they have more money to spend, and so what we saw is that you have more labor market and social insurance schemes. This is basically support for the labor market. Then in advanced and emerging economies, where basically you don't have the same amount of money to spend. As I said, in advanced economies, Germany is the one that has spent the most directly. This is the red bar here, compared to other European economies, while the United States has clearly spent more directly. This includes transfers of money to families and households in the United States, while that is something that we here in Europe have not done. What will this will also mean is that we'll see a strong increase in debt, and I'll talk about that in a little bit. In terms of guarantees, of loan guarantees, as you can see, that's some of what most countries have done, is basically saying that we are guaranteeing loans for companies and households in case that they need it. We hope that they won't, but this will definitely generate us more issues over the next few years when these loan guarantees start to be executed by the banks. And that's why we will continue to see this increase in debt, right? In the United States, as I said, income support was much bigger than in other countries. That's why gross disposable household income has increased in the US in the first 2 quarters of the year compared to Europe, where it has fallen, right? In China, there we see clearly that activity has rebounded to basically pre-pandemic levels. You can see that here on this chart on the right, with industrial production already at the same level that it was before the crisis, and retail sales still a little below. This is the last number is from October, but again, already growing at about 5%. So by the end of the year, beginning of the next, they will be at the same level that they were before the crisis. So again, the Chinese economy seems to have recovered fairly well, and will serve as a balance to the world, and as it grows, while the rest of the world basically is still not growing much, right? In terms of vaccines, as you know, we are all hoping that in Europe and the United States, vaccinations will start very soon. In the United Kingdom, they already have. But if we do, and this should give some more a bigger boost to growth in these economies over the short term. This is not the case in China, because China is already growing at a level that is almost normal, let's say. So even if you have or you don't have a vaccine in China, the impact is much lower than it is here. So even if we do have problems, China again will work as a safe harbor, let's call it, if we have some delays in terms of vaccination in Europe and the United States. And also China continues, as I said here, this is the stimulus that we've seen from Chinese authorities, a proxy for that stimulus, and it's expected to slow over the coming quarters. But again, the Chinese authorities still have room either by lowering interest rates or by increasing spending, because public debt in China is much lower than in the rest of the world, to improve, to increase support if need be. Just to end with a note in terms of debt and the cost that this is all having. Again, here you have gross public debt for until 2025. As you can see, it's expected to continue to grow. There's a big jump in the US and the Euro area. This is data from the IMF. In terms of China, it will continue to grow, but at a slower rate. But although this is very high, it's a very high level of debt, this should be fairly sustainable given that interest rates are where they are, right? There we have basically the lowest interest rates in history. In Europe, they are in most countries negative now, also in Portugal and Spain. Between yesterday Portugal and today Spain, our 10-year bond yields are already at 0 or negative. And in China, they are also, although much higher, at around 3%, this is fairly low compared to historical standards. And again, China here has more room to increase its fiscal spending. The one place where we do see that there may be some issues is in terms of private debt. As you can see, 2007 compared to June 2020, the last data available, we have seen an increase in non-financial corporations debt, companies in the world in general, but Chinese companies, private companies have increased their leverage much more than in other places, and that's where we could have some problems. Although this could be solved if the government just takes on more responsibilities from these companies, as was basically the case in the financial crisis in Europe and the United States. Again, 2021 should be a much better year than this one. We will see an improved flow of investment and also of trade, especially now with the new United States president, which should give us an administration that is much more, let's call it, normal than we had before, and relationships between the three big areas, China, Europe, and United States, should normalize compared to what we had with the Trump administration. And we should continue to see this improvement, but we will probably have still some bumps on the road, given that the pandemic is still not controlled, and until it is, we still may see some ups and downs over the next couple of quarters. And I'll leave it here.
Perfect. Very, very interesting and very fundamental presentation, Rui Mataguedes. I'll pass the word directly to Pedro Rodrigues from the Wealth Management side. So Pedro, the floor is yours.
Hello, good morning. Hello to everybody. I'm trying to share my screen. I don't know if you're already seeing it or not.
Yes, perfect. You can kick off.
Okay, once again, thank you very much. The panel is very interesting, and unfortunately, I'm the last one with very few time. I will try to be quick. Anyhow, any further information or questions that you may have, of course, you have our contacts and you can contact us after this webinar. In terms of what Bison Bank has to offer in terms of wealth management services, we've been developing this area of the bank for the past 2 years. We think we are at the point where we can offer clients, and we are able to offer clients a fully integrated wealth management service with many options that clients can take advantage of when they trust Bison Bank with with their wealth. We combine financial planning expertise, investment management knowledge, and the full European bank execution platform, both for individual and institutional clients. This is all done in an holistic manner so that we have a full picture of the client and we can provide the client with the best options possible. So we really use a flexible approach, a global approach, and a very flexible and unconstrained approach to get and achieve all the objectives that we intend to. This, of course, says that the basis of everything is our product specialist area, where we constantly evaluate and select the best investment instruments and solutions for the different areas of the bank, and of course, including the wealth management services that I will talk about a little bit next, which are discretionary portfolio management and investment advisory. All of this, of course, has the full coordination with our client management department, where we screen all the clients' profiles and risk levels so that we can provide, once again, the best solution that we have for the clients. This product specialist area is the responsible area for what we call our internal investment list. This internal investment list sets out the universe of instruments and asset classes that we can choose and pick from to build up the portfolios for the different clients. The process decision of our product specialist area is a full diversified approach. We use most and foremost our quantitative analysis, where we are very strong on fundamental analysis of all the instruments and all the issuers and assets that we invest in. We also invest very much in qualitative analysis, with company meetings, going through all the company reports and doing our share of work in terms of research. And at the end, we also look at some technical and trading analysis so we can, time our investments in the best way possible. Going through to one of the two main services of the wealth management area is this discretionary portfolio management. The discretionary portfolio management is a service that is suitable for investors who usually lack the time, experience, or desire to actively manage their portfolio. This service, in which we work for the investor, is customized to fit the client's investment objectives, their risk profiles, and expectations on projected returns. And for this, we use both model and tailor-made portfolios for the clients. In this service, the portfolio manager is responsible for all the investment decisions related to the client's portfolio, counting, of course, with the backup of the product specialist team, who constantly evaluates the best investment instruments and solutions for the client's portfolios. The risk levels and asset allocations are continuously reviewed by our wealth management committee, and of course monitored and evaluated constantly also with regular valuation reports that we elaborate for the clients. Finally, the clients benefit from reduced transaction costs when they subscribe this service. To match the increasingly global and sophisticated financial markets, Bison Bank has a team and counts on a team with more than 20 years of experience in portfolio and investment management. And of course, you can count on Bison Bank to shape the future of your wealth through our DPM service. This is just an example of our central allocations for our three different model risk profiles and portfolios. So we use the standards, conservatives, moderate, and aggressive profile for the clients that choose to invest through a model portfolio. Furthermore, we are very flexible, and we are very keen to offer a tailor-made profile in which we can then adapt even more and tailor-make the portfolios of the clients to really suit their needs. In terms of investment advisory, the investment advisory service is an investment service for investors who prefer to work together with an investment specialist, or despite having less availability, experience or desire to actively manage their portfolio, do not intend to delegate this mandate like it happens in the discretionary portfolio management service. This is a personalized service that adjusts to the client's circumstances, investment objectives, risk profile, and return expectations. The investment advisor supports the construction of the ideas to be implemented in the portfolios, but the final decision regarding execution is always the client's decision. In this service, we work alongside the client in the 3 stages of the investment cycle: the portfolio construction and implementation, the portfolio monitoring and regular reevaluation, and also the investment planning, meaning we define exit strategies and execution to get the best possible efficiency for the client. The investment recommendations are supported once again by the product specialist team, and we use a wide range of instruments ranging from third-party funds, ETFs, debt instruments, equities, structured notes, and so forth. All basic criteria regarding risk levels and asset allocation are also analyzed, reviewed, and monitored by the bank's wealth management committee. And of course, periodic evaluation reports are of course sent to clients. We feel that with the investment advisory service, clients benefit from the flexibility of pricing solutions on advisory and transaction costs, being able also to switch between risk profiles without any additional costs. With this service, we create investment proposals that aim to reflect not only the client's objective returns, but also their vision and personality. Finally, we have our execution service that we also make available to clients. With the execution only service, which basically means brokerage service, we offer investors an option to take control of their investment strategy and retaining their investment independence and responsibility of their trading decisions. Bison Bank provides direct access to trading desks and the wide list of investment options for different instruments, asset classes, and markets, giving, of course, the investor the freedom to create their portfolio tailored to his or her needs. At Bison Bank, investors have access to the latest trading technology for the different asset classes. As I mentioned, for the different instruments also, stocks, bonds, ETFs, third-party funds, since we have access to the largest fund distribution network in the world, which of course gives us the flexibility for all services within the wealth management area. So also in case the investor already holds positions in other institutions, the investor can always transfer to them, transfer those positions to us, benefiting also from a personalized advice tailored to his or her needs. So finally, and wrapping up, I try to be fairly quick. Individuals, businesses and institutions trust Bison Bank in delineate and tailor an holistic approach in order to build and manage their wealth. We are here to attend to the client's needs and to achieve the objectives of the clients together. Of course, all of this with the help of the client management department and the rest of the structure of the bank. And of course, we try to specialize and be very diversified in our portfolio constructions, being able to have different profiles and achieve different objectives for the clients in terms of China exposure. China assets exposure, both in equities and fixed income, so that we can really tailor make all the portfolios for the clients. Thank you very much.
Thank you, Pedro. Perfect timing. We have just finished our presentation in terms of the panelists. I'm going straight to the questions that we have here. The first question is on the Q&A side, which is how can we get a contact with Bison Bank? So here you can contact Bison Bank through our website, which is bisonbank.com, or I asked Lidan Chan also to put her contacts here as the client manager contact for this type of services in the bank. Ask Lidan Chan to answer directly on the Q&A side with the contacts. The second question is a question related to the equity markets, which is coming also from a person that is assisting our webinar. Thank you very much for your question, which is how can we place Chinese investment on quoted companies, in the companies that are listed without making too much turbulence. So this is it will be very good, in my opinion, that this could occur, but each time that someone intends to buy a stake in a listed company, of course, this if the news are known in the market or anything is published in the media, this all of course have an impact. But I believe that the objective of this question, how to invest in equity stakes in Chinese in Portuguese listed companies without making too much turbulence in the market. Here I ask Pedro Rodrigues to have some comments here. Quick comments, please.
I'm sorry, Francisco, you mean investing in Portuguese listed companies or
Yes.
in Chinese?
Portuguese listed companies by a Chinese, through a Chinese investment or investor.
I'm sorry, I don't really understand the question.
The question is, if a Chinese investor wants to buy a stake in a Portuguese listed company, how can this be done without making too much turbulence in the market?
Okay, well, of course, it depends on the company that we're talking about. Of course, Portugal doesn't have a very diversified equity listed market. Nevertheless, we have a few large cap companies that offer some exposure to sectors like oil, like electricity, distribution, retail, communications, and so forth. Of course, then we have smaller companies that may be more difficult to buy or to acquire a large stake. Nevertheless, this has always been the reality of the Portuguese market, and we have a full experienced team in our sales and trading department that can manage the orders so that we can find block trades for those companies in the market with our contacts, and also to manage the orders in the timely manner so that the impact in the equity market is not significant. So therefore, in those smaller listed companies, it's a case-by-case scenario, and it may take a few days, sometimes to build up a position. In other, the larger companies like the banks, like the utilities companies and so forth, that problem usually it's not there. So I don't think it should be a problem for any Chinese investor to acquire a stake or to build up a position in the main listed companies in Portugal.
Okay, very good. Also, Bison Bank will be very gladly open to help on these situations. We have running out of time. We have 3 minutes past the time. As a board member of Bison Bank, the door is completely open for any investor or any client that wants to open an account with us and also explore the opportunities to work with Bison Bank. Thank you very much to all the panelists. It was a huge pleasure for us. Hope to see you soon and keep in touch.
Thank you.
Thank you.
Thank you very much.
Bye-bye.
Thank you very much. Bye-bye.
Bye-bye.